Sage reporting for Kalkine Media again. Thanks for joining us, and please stay watching for our next educational topic. Today we're covering income statements, P&L or profit and loss. So what is an income statement? An income statement shows the profitability of a firm in a given reporting period. It is one of the three main financial statements used in evaluating a firm's financial health. Even a small business is required to furnish financial statements for bankers to avail credit funding. So also known as profit and loss or P&L statement, it reports the net income generated by a firm after summarising all income and expenses for a firm during a given period. It includes the impact of gains, losses, revenue and expense. Firms registered under the Company Corporation Act of any jurisdictions are required to report financial statements periodically, and reporting intervals are usually quarterly, semi-annually and annually. So what are the constituents of an income statement? Revenue and gains. Revenue refers to the sum of money recorded by the firm in lieu of selling products or services. It usually refers to operating revenue. Gains can arise during a business period, and it also depends on the type of business. Expenses and losses. Revenue is supported by the expenses incurred by the firm. In an operating period, firms can incur a range of expenses. It is important to deduct expenses from the total income to arrive at net income figure. Similar to gains in the above part, losses can be incurred by a firm, like a loss on the sale of the asset or unrealised losses in the assets. Cost of goods sold. Cost of goods sold is the total direct cost incurred by a firm from the procurement of raw material to the sale of the finished goods. Gross profit. Gross profit is the amount of money earned by the business after deducting COGS from revenue, cost of sales or cost of service from the revenues. It does not include variable cost incurred in manufacturing a product. Operating expenses. Operating expenses are the expenses incurred during a reporting period and include items like wages, salary, marketing, selling, distribution, depreciation and amortization. Interest expenses. Interest expenses are the funds paid to creditors or lenders of the company as interest payments on debt. Income taxes. Income taxes are the tax paid to the government on the profits of the business. Net income. It is calculated by deducting interest expenses and tax from operating earnings to arrive at net income and earnings per share. Thanks for your time watching. Sage here reporting for Kalkine Media.